We got KP in Newark getting ready to fly back to Orange County on your last business flight of the year. Congrats.
So exhausted.
We got Christy doing some Uber driving, working that side hustle.
Please rate me 5 stars. I need to keep it up.
Courtney probably onboarded another 70,000 loans this week. No big deal.
42.
There we go. We are all here. So, guys, there's a lot to talk about. It's like everything at once and nothing at all at the same time. So, in no particular order, the things we want to cover today: government shutdown is over. Let's hope. Let's hope reality comes back. We've got talk of a 50-year mortgage. There are lots of great memes out there.
Let's get these good folks paid. Let's get them paid. Let's go.
There we go. We got KP buttering up TSA. Hopefully you don't get tasered. And we got a portable mortgage maybe in the future. Who knows what that looks like? Fannie Mae or GSEs. I guess Fannie Mae has removed the gate of requiring a FICO to get into DU, and we can talk about that. But where should we start? Let's start with KP. You're coming off the MSR event in New York. What's the word on servicing right now?
Well, good call out, Joe. Christy, I know how hard it is to lose a little doggy, so hope you're hanging in there. I know, sweet little doggy. 20 years. Let's go. So this is my second year to come to this conference. It is actually very nichey, and you get like all these behind the scenes people. For example, this guy Scott at Change, wholesale. Like, do you know this AE? Do you know this AE? No, I don't know any of them. But like he's the guy behind the scenes handling buying and selling money. It's what we do. Like the secondary market, like I always said, is cold, heartless, and unforgiving. So is the stock market, by the way. And we buy and sell money in its purest form, right? Courtney just onboarded 42,000 loans this week. I mean, talk about buying money at a high level. She's a beast. Very nichey. You got these guys talking about S curves and what is the return on investment for MSRs with cash flow? Two most important things: know your prepaid speeds and know how to evaluate. And mark your portfolio. I mean, just some really brilliant people. Keynote, David Finkelstein, CEO of Annaly Capital. I mean, not Annaly Onzo, the non-QM, like all of Annaly Capital, like a massive monster company. It was great to hear him speak, and I had a panel right after him. Just a great conference and good group. Midtown Hilton here in over in the city in New York, and I got some street meat. And for those that go to Cap Markets, the halal chicken and rice. Still, look, come on, Courtney, you're drinking kombucha.
I don't eat food out of a cart on the street by a guy that I don't know. No.
I love it, street meat.
No, I don't stand and eat anymore either. Once you pass that 40-year mark, the 40-year body mark, you really shouldn't be standing and eating. We should be,
I'll tell you what. Wednesday night, had one cocktail with Kirk Donaldson from Halcyon, and then I went out after he went to go back to his hotel. I got some halal street meat. I ate it standing next to 3 police officers. I said, pretty quiet for a Wednesday. He goes, last Wednesday, a guy had a knife. And then for those that go to Cap Markets secondary, I rolled over to Mean Fiddler for an honorary cocktail while I pounded out some email, and then I was in bed by 2. So great conference. I'm so happy to get home, straight to flag football playoffs from my kids the second I land, and let's go. Let's finish the year strong.
No doubt.
Question for you: at the conference, at the niche conference with the street meat, were they talking at all about pricing for climate risks? Like, are we talking about that yet? Or are we not talking about that?
Yeah, they always talk about it. Who's been talking about it for years, and in my opinion has the best data is Cotality. I mean, you could drill down there's a risk score for every property in America based on climate.
But are we
And,
pricing for it yet?
Well,
Like,
we
are we
can
have we started pricing? Like,
No.
that's the thing, is that like there's a lot of data. There's a lot, like some people would say that we're all gonna melt into the earth by 2050. I'm
getting a 50-year mortgage if that's the case.
Yeah,
That's
right.
going to be a problem. This data, though, is not just available to the servicers or to us as industry folks. If you actually go on Zillow and look at a property, and you can kind of scroll down in there, this data is provided by, I think it's First Street, State Street, one of those folks. But you can actually get a climate risk score for the property, and it'll tell you about, is it wind, fire, hail, flooding. What's that score? I actually looked at that when I bought my new house in Texas.
yeah, when your house is underwater in Miami Beach, you can use your portable mortgage and go buy upstate.
But Courtney, to your point, I don't see it being priced today at the loan level. Obviously, it probably is priced at the pool level if there's, trading going on that way, but it's definitely not, we're not seeing it yet at the street level in terms of how we price a transaction to the consumer, even though they get priced that way in their insurance, right? It's already priced there.
Yeah, it'll be interesting to see what the catalyst is to start. I think that the science is there. I'm not a scientist. I think that the science is there. So just talking about the science, talking about the data. I don't know. It'll just be interesting as to what what is it? It wasn't the forest fires in California. It wasn't that wasn't enough. And we tend to make changes based upon crises in this industry. So fingers crossed.
Yeah.
Fingers crossed.
Yeah,
fancy money, fellows.
Yeah, nobody wants to crater their balance sheet and mark something down until 20,000 structures out of the 83 million in America actually get hurt by a fire, or a tower actually crumbles in Miami Beach and then insurance goes up. So I think the mark is on insurance currently, to Brian's point. And so you have some backing of the collateral. And if you can afford the nut and pay the insurance, but other than that, nobody wants to crater the balance sheet. Yep, let's mark it all down because maybe in 2030, Miami Beach will be underwater. Yeah, I'm just not seeing that.
So let's move to the kind of the fun stuff first, the 50-year mortgage, because the meme game was strong this week around the 50-year mortgage. How many pictures did you see of me buying my home and me retiring my 50-year mortgage, and the AI old face where they needed the upper lip Botox to kind of keep things tight. Like how I worked that in, Courtney?
I like the Dave Ramsey memes where he's in critical condition upon hearing of the release of a 50-year mortgage. I'll just be contrarian. If you're a renter for life, and that's the difference of you owning, if you rented for 50 years, you'll be paying 100% mortgage to a landlord your entire life. So, I mean, it's just another tool in the toolbox. It's a tweet, if we're still calling them that. So, there's no details out yet, but I mean, on the margin, it could help some people. And I'm waiting for the details to come out, and then Barry Habib will put it in the cost of waiting, rent versus buying. Oh, by the way, on a 50-year option, here's, how can you model out 50 years? I mean, we had people talking yesterday at this conference, hey, what if home prices don't appreciate? What if we have some years where home price comes down? I mean, that was something a year ago at this conference, Stan Middleman said. How do you model out, 50 years? And the reality is loans don't, they used to last 7.5 years. Now they're lasting 9.5 years. Maybe that number will come down with portable mortgages. If people go take their locked in cheap mortgage rate to another property, maybe we'll get that number back down. But I don't know. I still think the trend is your friend. I mean, unless, people are refinancing at a high scale. Like I saw just under 60% of all loans done last month were refinances. Fannie and Freddie took in like 60% month over month refi business. I mean, it's just, that's 1 month, right? So, half the originators of the business were ramrodded out of here since the peak in 21 just because rates went higher. So there's a lot of factors at play that happen in a month, 6, 2, 3, 5 years. So who knows what happened in 50?
Yeah.
Well, I just like that we've started a conversation, and we started it a long time ago around affordability. And now we've moved into, let's talk about some actual solutions, some things that could help. Maybe it's a 50-year mortgage. Maybe it's the portable mortgage, which, by the way, came up in the very first FHFA innovation tech sprint day thing that we did like 3 years ago. Like it was the suggestion of our team. And, there's a lot to it. Now, I'm not saying we're the only ones that suggested it, by the way, but we've been talking about this type of portable mortgage. And one, can we do it on a go forward basis, which is one thing. And the other is, can we do it on a go backwards basis for some of those people who have 2% and 3% loans? And how would that work? And then I think about it for me and say, like, hey, I have one of those 3% loans that I had to sell because you didn't have this in place. You're going to give me my 3% back? Like these are the questions that are going to come up, and they haven't been answered in 150 characters. They're more conversation that we have to have. But I, for one, am glad we're having a conversation, that we're brainstorming things that are outside the box, that are outside the things that we look at every single day, to say, how do we make housing more affordable so that we can continue to have the dream of homeownership?
Kara wants to know what Courtney thinks about portable mortgages.
I think that it's like another solution that we're going to dump on servicers, like assumptions that are actually front end credit reviews, and it's going to piss people off. I think that, policymakers always, I'll rep my people. Policymakers always think about the front end and making loans, just like the mortgage industry thinks about making loans, and I get it, right? But when you think about what's downstream of that and where there are problems, people are in these processes for a really, really long time at a lot of servicers right now. This is an industry, problem, not a, specific servicer or specific sub servicer or anything like that. And I just think, if Fannie Freddie just made all mortgages assumable, I think that would be a step in a direction where people have processes in place already, instead of, I don't know. I think that it takes it a step further even, right? So today, if you're in the Ginny space, there's a lot more options, including third-party assumptions. I think that what you're then kind of talking about it's just more of like an open line of credit that you approve me at some, like I've got this pocket to spend. I get it, but I just think it's a different, we're moving away from lending on a house then. We're talking about, which is fine. Maybe that is the answer for an affordable future, ? But yeah, at the end of the day, trickles down.
At the end of the day, there are some states, and there's been this conversation of, is today's mortgage really a secured loan? Or is it really a quasi-secured loan? So, in the state of Texas, you can foreclose on day 181 or some such number. In New York, I think it's year 181 that you get to foreclose. So is that really a secured asset? And this is a conversation that lots of industry experts have been having for multiple years and batted around. And said, so what's wrong with thinking about a truly portable mortgage that gives you this thing that is your rent, that is your, the way that it works? What if we made all loan payments stop at age 65, right? Like, I think lots of good ideas.
Yeah, no, I don't think that there's anything wrong with it. I just don't think it's a mortgage. And I think that, right. And so I also agree with what you're saying in terms of, I was in a room last week where it was funny, where they said, we're going to start a drinking game in this room where anytime anybody starts with, I agree with what you just said, and then go, right, everybody has to, like, oh my God. No, I mean, I agree with it, but it's just, you're talking about accessing large amounts of credit and how to, how do people get the money back, right, at the end of the day. I think the other thing with the portable mortgages is that there's going to be a lot of securities that get messed up with that, and who's going to buy loans out of, pools, and I don't know. There's a lot of there that we would have to think about. I don't think backwards is possible, which is fine, right? I don't know.
Yeah, I think there's a difference between tax portability that someone called out in Florida, also in California, your tax base staying low versus the mortgage being, portable. I mean, FHA is already there, right? Assumable. So, I don't know how much of that gets done currently. Again, I think it's just
hardly none.
Hardly none. So I think it's just another, tweet, idea, brainstorm. Some people might use it,
But it stays with the house, right? So if it stays with the house, it's still a mortgage in my mind. And there is still the ability to foreclose, even though I agree with Christy that I think that there should just be a national foreclosure standard, and that would make it a lot easier, but that's
Gizmo could get that done.
Gizmo. Okay, we got it. Sign me up for that committee.
Yeah, just let New York's foreclosure process in Massachusetts and Illinois and California meet the standard of Texas, where they're like, oh, you didn't pay your mortgage? You got 90 days and you're out.
Here's my take on the portable, the 50-year, and Christy hit this on the head. KP, I think, even opened up. These are conversation starters, right? Neither probably are likely to come to reality, but like this is where the importance of a professional local loan officer comes into play, because just like we're talking about this, and we probably see it more in our feed because of who we pay attention to in the space, but the average consumer that sees 50-year mortgage, they assume it's there already. And so this is where that local professional that understands reality can kind of level set and demonstrate their value to their community. And just to me, it's another plug for the Abdels of the world. I know KP, you were with Abdel this week. He's one of the best out there in terms of a local leader.
Well, like you said, I mean, originators are the front line of education. I've been telling Fannie and Freddie that for years. So arm them with more tools like you guys did at FinLocker. By the way, Abdel just texted me, yo, had a good time last night. So he came out and if you know Sean Murphy, and he had 2 spots open at his prepaid dinner. So we went to Salt Bay, and it was not a topic of conversation, the portable mortgage. But yeah, I mean, you gotta educate the local level, and who's gonna talk about this stuff when the borrower's like, I saw this article about da-da-da-da, right? Oh, Fed cut the rates are down, right? Well, actually they went up. Borrowers read headlines and then they ask the originator, and they've got to be armed with information to have a sentient conversation.
Okay, we're going to keep going in the grab bag. So government shutdown ending? Question mark.
Over.
Is it over in Newark Airport?
Pretty quick. I mean,
yeah.
Your boy just rolled through TSA pretty quick. I don't know how long it'll take us to get off the ground once we're on the runway.
I mean, it's Newark, hopefully wild card.
Yeah, wild card. Usually, weather's great. Not quite as blue sky as Christie's Uber, but pretty nice. So, yeah, I mean, House passed Wednesday, signed into law that night. I mean, do these people ever sleep? I mean, it's crazy. So good to see them working and now let's start talking about the Epstein files. Just kidding. I don't want to do that here.
That's Monday's show.
Courtney,
what about
not to join on Monday?
Yeah, right. What from your seat, Courtney, and now it's officially over, but when do you start seeing the impact of it being back on?
Yeah, so I mean, servicers have a lot of work to do depending upon their size, the size of their portfolio right now. And consumers typically have two paths in these scenarios. Some of them were working and they're going to get back pay. And I understand that that pay is coming on the 21st of the month, if that's helpful to anybody. That's like back office information. No, yesterday I was in a call and somebody said that. I don't know if it's true or not. But then you have a series of consumers that weren't working during the time period and they're not going to get any payment, right, for the duration. The shutdown was too long for what the average consumer has in their bank account with regard to mortgage and liquidity and the ability to make a mortgage payment. And so we're going to be back in payment deferral and other loss mitigation solutions land. The triple whammy would be the consumer that does have one of those lower interest rates, but ended up being 2 payments down during this time period and maybe used all of their available deferral balance during COVID or something like that, where the modifications these days on those older loans jack the monthly payment up. And so we'll see some fallout from this for sure. I think that, standard rule of thumb in these scenarios is, anybody who's going to get paid is going to be able to bring their loan current. Strong recommendation there, everyone. Recommend, right, that you bring your loan current. Don't save your deferral for a rainy day.
Have you seen an uptick in?
Yeah,
I mean, we've seen a little bit in FHA, but
we've seen a lot. We've seen a lot of overall. We've seen a lot of people raise their hand and say that they need forbearance protection during this time period. The majority of folks that we've seen, and we have a pretty high volume of VA loans. We've seen a lot of folks in the military that had to get this assistance during this time period. And so, yeah, bring your loans current. I save that forbearance for when you need it.
What a great tip, though. I never thought about the impact of somebody that took forbearance and maxed it out during COVID.
Yeah.
I never thought about like having to dip back in there and what that looks like.
Yeah, it's and escrow, right? Depending upon how servicers manage escrow payments during that time period, because it was really only principal and interest. So when we see, it's kind of like delinquency events post-COVID, what are they going to look like? This is the first one of any universal proportion. And so we'll see. I mean, I'm very confident that, those who got paid will, catch up on their payments, pull themselves out of forbearance and keep moving. There will be a small percentage of these that have to go through the formal loss mitigation chute, though.
But how about the timing of getting paid on the 21st? Pay back your bills, not a stock financial advisor responsible for your losses, not responsible for those, only your profits. NVIDIA reports next week. Buy on the rumors, sell on the news, it sells off, and then whatever money you have left over on your back pay, just go YOLO on NVIDIA stock. Loving it. What an opportunity.
Pay the mortgage first.
Pay your mortgage, guys. And if you
pay the mortgage first.
Get your Botox second.
We are
Botox
today.
Second.
We are sponsored today by the Lip Lift.
I'm sponsored by Lip Pillows. Where's my Zen crowd out there? Anyway.
Oh my gosh, KP, that's not something you needed to share with America. Should we talk about this no more credit score thingy?
Oh yeah,
we should.
That's the grab bag. Yeah, let's go.
Love it.
Who wants to start, Brian?
Love it.
I'll start because I was reminded of this often. At FinLocker, Henry Kaysen is the CEO, is a 27-year Fannie Mae executive. So he always reminded us, DU doesn't underwrite on FICO score. The algorithm doesn't underwrite FICO score, but the FICO score 620 was the key to get into DU. If you didn't have a FICO score and you didn't have a 620, you did not get into DU. So there's headlines are headlines, but the reality is the fact that Fannie's saying a FICO score is no longer needed to run DU doesn't really change how loans are going to get decisioned. It just changes
No.
how many loans get into the engine to begin with. There, I started.
Yeah.
But you still have to have the FICO score to close the loan. It still impacts the LLPAs. Like, it's only, you don't need it up front. So how does this really change our functional work, our functional life?
Well, I think the idea is that you don't have to have a FICO, and there's a different hit for no FICO. We've always said in the origination front, having no credit is better than bad credit, right? So, you know,
Yes.
if you're using alternative credit, cell phone bill, utilities, you know, you actually look cleaner than someone with one finger hut trade line with a 520 score. So shout out to those who know what finger hut is. It's a gifting magazine. Anyway, I will say everyone thinks you have to have 20% down, which you get from either mom or dad. I still think FHA will dominate the no credit score space, which only requires 3.5% down, which can be a gift. So I still think, you know, again, on the margin, could help some people that want to put 5% down. There is a Fannie low down payment program. I don't know if I haven't seen the details if the no credit score applies to that, you know. So, you know, like the Home Possible, Freddie, and you call those different things. So anyway, more details needed.
As always.
So
Yes,
Hey, we're
please
all, I feel like we're
please
all
don't cut
waiting
it.
for that.
it was a barrier to entry. So there's more people in your funnel, which means that Fannie Mae is just trying to open up new opportunities for everyone by letting more people in the funnel. I don't know.
Fannie and Freddie.
Yeah,
Fannie
yeah.
and Freddie.
Oh, the both? Everything I saw was tied to Fannie, but
Yeah, but Freddie didn't have a gate. Like you could get to
they had a
LP.
good
You
start.
could
Okay.
get to LP without a credit score, I believe. Used to be, you know, I think that was always the standard there. Yeah, this again is like another reason why consumers need to, you know, have a local professional that understands all these nuances, right? Because the headlines scream, I can get a mortgage with a credit score below 620. It doesn't say that, but that's the average consumer is going to read that, right? And so the devil's always in the details.
I don't like political echo chambers, but I signed up for True Social after President Trump posted back in April, "You're all going to be very happy tomorrow," basically alluding to ending the tariff kerfuffle. And then the stock market ripped, literally called the bottom of the stock market. I'm like, shoot, I better sign up to get more stock tips from this guy. So, you know, it's interesting to see the tweets and the True Social posts and whatever else comes out. I think X is still like the main place where Pulte does his work. And yeah, I mean, you know, again, we're lacking details. We need it. Would love to get more details and figure out how to talk intelligently about whatever a new offering might be.
For those that are looking for some interesting reading, if you get the daily Chrisman commentary newsletter, in the opening paragraph, Rob has an interesting article around Director Pulte and kind of his family and the Pulte business. So it's a interesting read for folks. All right, it is last word time. My last word is Courtney. What's your last word?
My last word is everyone who's mid-travel right now, get home safely over the weekend. Go Lions.
Go Lions.
Oh yeah, beat those Eagles.
I know, the nastiest team in the league, guys. They're going to play them on Sunday.
That's right. Tush pushed them all the way backwards.
KP, what do you
Christy.
got for your board?
Oh, me? Well, I mean, they boarded 4 minutes ago, so maybe I should go. Last one of the year.
Your seat up front is waiting for you. Your throne awaits.
You can give stock tips to people next to you because everybody will have money.
It's all corporate money. No one really has it. I'm really looking forward to the chicken and rice. I'm starving. So what a great year. You could on United, you could pre-order your meal. So I love it. I'm not a big United guy, but I'm kind of getting one over, although I'm still Delta all the way. I would just say have a wonderful weekend, everyone, and Christy, get your last word in.
Go buy your turkey now. If you have not already bought your turkey for Thanksgiving, be prepared. Go get your turkey, get whatever sides you can get that you can start to pre-make. Like, it's going to be, Thanksgiving is going to be here before you know it.
I like that Thanksgiving inflation barometer data that comes out, like the average cost of the meal. I think it'll be down this year versus last year. How about that for an over-under?
Let's go.
I'll take your wager. Let's
Oh, you
see
think
what
it'll be
we
more
get.
expensive?
I think it'll be the same or more.
I think it'll be less.
Depends if you're buying coffee or not. All right, guys, that's the last word. Happy Friday. We'll see you back here next Friday. Peace out.
Absolute victory every day, Courtney. That's strong.